Good morning, everyone. Well, after a few days of a mixed performance, the dollar gained all around yesterday. As I mentioned yesterday, the U.S. government budget deal has taken some of the fiscal risk out of the dollar and increased the likelihood of the Fed starting to taper at next week's FOMC meeting. Yesterday's solid retail sales figure for November also helped support the idea of Fed action next week. Meanwhile, the market's beginning to think that the Fed is less likely to take some other technical measures at the same time to offset the impact of the tapering. The absence of such measures would tend to tighten monetary conditions more than had been expected. Hence, rates rose and the dollar gained yesterday. The dollar was particularly strong against the yen and the Australian dollar. The yen weakened on expectations of greater capital outflows from Japan's government pension investment fund. Takatoshi Ito, the chairman of a group advising Japanese lawmakers on pension allocations, told the government committee that the fund should get a new board of directors and the law governing the fund must be changed if it's unable to make the changes itself. This has increased expectations of further portfolio shifts out of Japanese government bonds and into foreign assets from this 124 trillion yen fund, the largest such fund in the world. That would not only increase the outflow of funds from Japan, obviously, but also reduce domestic purchases of JGBs, which means either interest rates go up, which could start the death spiral of the Japanese government's finances, or, more likely, force the Bank of Japan to take up the slack with further purchases. In other words, increase its quantitative easing, which probably means a weaker yen. The yen was the weakest G10 currency this year, and I expect it to repeat that performance next year as hopes about Abenomics give way to reality and the country's massive debt and intractable economic problems come back into sharper focus again. Today, we've got a very quiet Friday ahead of us with no major European indicators. There are two major ECB speakers and one Bank of England speaker today. In the U.S., the producer price index for November will be announced, but that's not usually a big factor for the FX markets. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX, wishing you solid trading.